Hello, good day, and welcome to the stock market's stock market analysis. Title of today's topic is what to do in this COVID sell-off, date 26 November 2021, and I'm your host, Stephen Loh. Now we have a very nasty sell-off today because of the COVID variant. If you look at the Dow and the S&P futures, they are selling off because of this new COVID variant that is found in South Africa. The fears of COVID are very real because businesses can be really affected if there's this new surge of COVID. And if this new variant proves to be very destructive, then it's going to have a very big impact on different nations in this world, especially we are entering into this winter season where COVID might take off. And countries may start to ban travel to and from certain places. I heard the UK is banning travel from certain places from Africa. So if this COVID variant starts to spread and countries start to ban travel to and fro from each other's country, it's going to affect business again. Now, the March 2020 COVID sell-off is a grim reminder of what can happen to the stock market. Now, it's no joke because this impact of COVID is so big that it causes business just to shut down overnight. If you just look at your own country, your own neighborhood, you know lockdowns here and there, and restaurants, businesses just completely, a lot of them go down in just a very short period of time. Which is why stock market can sell off very fast, because it's the stock market is like a machine that tells us what might happen in the future. So what do we do right now? Right now we need to look at the charts to see what happens and then act accordingly. Right? We'll try to I will try to do more analysis videos in the future. In the past, I did some videos, but not very frequent. Usually, I comment and write on my website, www.thestockmarket.com. But I will try to do more analysis videos from now on. So subscribe to my channel and like if you learn something new and find the analysis beneficial. Now, let's take a look at the chart of the S&P 500. This is the S&P 500. I did not write the instrument down, but you can look at here and know it's the S&P 500. It's a daily chart, and of course the open, high, low, close. I have on my chart the 20 MA, the 50 MA, and the 200 MA because I like to know what is happening in the short term, medium term, and long term. The 20 MA tells me what happens in the short term. So if the market is above the 20 MA, I have bullish bias short term. If it's below the 20 MA, I have a bearish bias in the short term. You can see how it drops below here, and we should have a bearish bias. It went back above the 20 MA here, and we should have a bullish bias in the short term. And here we see the S&P slash below 20 MA very aggressively, and that brings into question the validity of the short-term bullishness of the market. The 50 MA points to the midterm. We are still above it, which tells us that midterm we should still continue to have a bullish bias on the S&P 500. And the 200 MA, despite the sell-off in September, you can see that the market has never dropped near to the 200 MA, neither has it dropped below the 200 MA for a very long time. And the slope of this 200 MA tells us that the market is bullish long term. If it's rising, it's bullish long term. You can see here, the 20 MA, the slope of it was bullish rising. So during this period, the market was short-term bullish. Okay? And you can see that the 50 MA is also rising. So what this tells us is, to have an open mind to be bullish bias in the midterm and long term. For the short term, right, we have to be really cautious, because if the S&P doesn't go back up, right, we might have a sell-off down to the 50 MA, which is this blue line, and the S&P has broken below this low here, and that's not a very good sign. So we have this support area here. This is the previous high support. Once the previous high is overcome during this rise here, it becomes a new support. So if the S&P drops to this support area, which is maybe where the 50 MA, it might meet the 50 MA, then we might see the S&P bounce back up. But with this COVID sell-off things, even in March in 2020, we can see how aggressive it is. I'm just worried that it might just slash through everything down to the 200 MA. It might happen, it might not, but just watch this support area very carefully. So if S&P managed to find support there, then we might have bounce back up. Next, I want to show you the Dow Jones daily chart. Right, back in October here, we found support very near the rising 200 MA. It did not drop below it, so the long-term bullishness is still intact. We made kind of a ascending triangle breakout, and the Dow went higher. So the ascending triangle, the top of the pattern, is support area, can act as a support, and that is where the Dow is dropping to, right? And this is where it meet the 50 MA as well. So we want to look very carefully if this support holds. The top of the ascending triangle pattern usually is a very strong support area, and it's possible that Dow may stop falling here. But if the sell-off is so severe, it might drop to the 200 MA. And we don't see any clear signs that Dow wants to go back up. One of the best indicators to tell us whether the market wants to go back up or not is to watch whether it can break above a downtrend line. You see here, back in September to October, where we can draw a downtrend line here, the Dow broke back above the downtrend line and moved higher. Here, we can draw a downtrend line, but we don't see anywhere that the Dow wants to go back up. No, not yet. So I'm not very convinced right now that the Dow will go back up soon, unless it is able to find support at this 50 MA, trade sideways a bit, and then break above this downtrend line. Then it may resume another leg up. So do take that into consideration, put it at the back of your mind. And there's also a possibility that it might sell off down to the 200 MA, which is gonna be very bad. But I see the 200 MA as the last line of defense for the Dow Jones. If it drops below the 200 MA, then we should be start to have very concerns about the long-term bullishness of the Dow Jones. So far, it hasn't dropped below it. So let's just continue to remain long-term bullish, but short-term and mid-term on the Dow, we should be a bit cautious. Next, let's look at the Nasdaq 100. Now, the Nasdaq 100 is stronger than the S&P 500 and the Dow. Usually, in a true bull market, the Nasdaq or the tech will usually lead, and this is where the Nasdaq 100 has been leading the S&P 500 and the Dow. You can see that it made all-time highs here, and it has been very bullish despite the COVID sell-off. It has not broken below the lows of these two bottoming tails. Now, the presence of two bottoming tails usually tells us that the market wants to reverse back up, and you can see it right here. But because of the COVID news that come out, it quickly slashed down here, but it is still holding the lows of these two bottoming tails here, and it's the 20 MA is still supporting it, and we can draw a trend line here. If the Nasdaq is able to stay above this trend line, then all is well. We might have sideways trading and then move back up. But if it drops below the low of these two bottoming tails and this uptrend line, there's a possibility that it might quickly sell off to the 50 MA, and that's going to be very destructive to many stocks in the tech sector. So we have a previous high support here because the Nasdaq, it broke above this downtrend line, shot higher and overcome this previous high. Once a previous high is overcome, it becomes a new support area, and you can see a lot of congestion here. This congestion, about 1 or 2 weeks, is going to offer quite a lot of protection or support in the case that Nasdaq drops to here. And it's also probably where the price might meet the 50 MA. So you have psychological support here, and you also have a price support here. So at this moment, I'm not too worried about the techs yet, because it's still at the 20 MA, and there's a lot of support at the 50 MA. But if it drops and slash below the 20 MA and then goes below the 50 MA, well, there's going to be quite a lot of trouble ahead, because you know the next stop after the 50 MA will be the 200 MA, and it's somewhere along here. So the market might meet the 200 MA around here, and from this place to here there's quite a lot of drop. So you know, it's going to be very destructive if we see the first sign here being ignored, the second support being ignored. So in summary, short term, we have studied the charts of the S&P 500, the Dow, and also the techs. Short term is telling us to be very cautious, because if the market continues to drop, we're gonna meet the 50 MA and 200 MA of these major indexes, and it's still quite a long way from the current price to the 50 MA, 200 MA. So we have to be very cautious of a deeper sell-off. Mid-term, I would say we are still alright, unless the COVID sell-off continues to slash through the 50 MA of the S&P 500 and the Nasdaq 100. If that happens, right, it's going to be quite nasty. Long-term, we are still bullish. The three of the indexes, the moving average, the 200-day moving average is still sloping up, and therefore we should continue to maintain a bullish bias in the long term. So if for long-term positions like your Apples and Microsoft that you're holding for years, it shouldn't make you worry, right? Because every deep sell-off only offers you a more opportunity to buy it at a cheaper price, 10% lower, 15% lower. So I hope you find this simple analysis of the S&P, the Nasdaq 100, and the Dow Jones. I hope you find it really beneficial. It's a very simple analysis using price, support, and resistance, and also the moving averages. But through this simple analysis, we can gain a lot of understanding of the stock market and know what to do, right, for in the future. So do subscribe for more future videos. I hope I can post more videos at least once a week, or maybe I try to do it midweek or early in the week. Maybe I can go up to 2 or 3 videos a week if possible. And remember to like if you find this analysis beneficial. And of course, if you want to learn more about how to analyze the stock market, I have an entire free course that goes into quite a lot of details, right, from start to finish, from beginner to more advanced. It's free. You can read all of it in my website, www.stockmarket.com. So thank you very much for staying to the end. I hope this analysis is beneficial to you. And this is Stephen Look, and I'll see you in the next one.